So for today, for trading psychology, I know you know a bit of trading psychology and how it affects trading. So this is the mental game that normally separates winners and losers. Let me just mention quickly that trading um, is a game of probability. So it's a game, it's a sort of a game you are playing with chances. So if you're right, it's good. If you're wrong, it's okay. You take a loss. So in between, because it's a game of chances, most of it you don't do most of the work physically. You'll do most of the work in your mind. So it's a bit taxing to the mind. Okay. So it's more of a mental game. It's like gaming. You see gaming unatumianga sana akili hata kama unafinyafinya ukicheza game unatumianga sana akili like chess, like playing chess.
Oh,
You get?
okay, all right. Are you a gamer?
Not
Uh,
really. Not really.
Okay. Okay.
Yeah. But
Ningefurahi niseme "What? Hata gaming nakuja mnionyeshe."
no, not really. I like to play chess, but sikwangi anywhere close. But you see, it's sort of the same. So gaming, chess, hizi games mingi zinakwanga sana sana unatumia akili. So the
Mhm.
same case with trading. A lot of it goes to the mind. Hata ukinotice ukicheza game after maybe an hour, unachokanga tu akili unaachana nayo unaenda. Although you love it, you have to let it go, si ndio? Because it's
Mhm.
tasking to the mind. The same case with trading. So it's a mental game. And once you understand trading psychology, you're gonna separate yourself from a profitable trader and a losing trader. Quick context. I'm repeating it again. I think this will be the last time I'm repeating the three pillars of trading. We have psychology, risk management, and strategy. In this topic, we're gonna reverse. I know the first two times you said strategy is 80%. Yes, 80%. Then risk management 10%, 10%, ama 60%, 2020. So in this class, I normally like to reverse it now so that you see the point. So psychology, we're gonna give it 40%, risk management 40%, and then strategy 20%. And you're gonna see why. So the reality is strategy just finds the trade, risk managers sizes the trade, and then psychology is what is gonna help you execute the trade. Because remember, you can see your setup there, but you don't end up trading it because maybe you're afraid, you're not confident. You see those things. And then somebody else is gonna see a trade there and it's not fully according to their strategy, but they take it. You see, also form of fear of missing out, still controlled by psychology. So the psychology bit, whenever you execute a trade, that's where psychology comes in. Because strategy now will guide you on where to assess price is going up or down. And then risk management, sizing that trade, and then execution. So you see, psychology now becomes the broader thing that controls trading, right? So,
Mhm.
in short, without psychology, the other two pillars are worthless because if your psychology is not gonna be good, you're not going to do well. Why psychology dominates? The shocking statistics: 80% of trading failures are psychological, not technical skill issues, psychological. 90% trade failure rate is the primary uh, okay. 90% trader, it contributes to 90% trader failure rate because it is the primary factor that helps a trader do well or not. And then you're gonna have a lot of emotional decisions, which especially when you are losing and also when you are winning big. So you need to be very careful because a lot of a lot of trades are gonna be controlled by your emotions. and your psychology. So I like to go to do the science behind trading, but because of time, let me just mention briefly. So in the brain you have the amygdala, you have something called dopamine, you have cortisol and the prefrontal cortex. It's a bit technical, but let me just mention juju. But you're gonna hear, I know in other psychological topics, you've heard some of these terms before. So amygdala is the one that processes fear. So in terms of trading, losses trigger same response as physical pain, same fear. So and then in dopamine unajua ile excitement. So it's the reward chemical. So winning creates addiction, like gambling, drugs, and so on. And then cortisol. Cortisol is the stress hormone. It reduces decision quality when you are stressed by 30 to 40%. And then the prefrontal cortex, it is the rational thinking, like the wisdom part of your brain. So it shuts down when you are emotionally stressed. Okay. So this research, there's some psychologists have done research for this in the finance industry. Remember, finance industries are very, very big. It's one of the biggest industries in the world. So, and we work with psychologists. So there's some psychologists who have done such research, and they concluded that losses feel more than two times stronger than gains, and then cortisol levels predict performance, and then high emotional IQ improves your returns. So you have to have a very high EQ. You be good emotionally. So there are four major psychological enemies. One of them is fear, which is the paralyzer. In fear, we have things like FOMO, fear of missing out. We have which is chasing trades and entering at poor prices. The solution for this is you need to always remember that there will always be opportunities available for you. So not need to have FOMO. Loss aversion, avoiding trades. You are just afraid of entering trades because you're afraid of losing trades. Now what is your job? So afadhali uende utafute tu kazi ingine. So another aspect of it is closing winners early. The only solution for this is risking only 1% to 2% per trade. Another one is being wrong. No stop loss. You don't have stop losses. I think we discussed this in the risk management class. You don't put stop losses and then you add to losers. The solution for this is you need to accept losses as part of business. And then success is also a type of fear. You self-sabotage yourself when you are more profitable. So you need to recognize you deserve success. So just pause for that day, especially when you've made so much money. Pause, go celebrate your wins, and then come back when you're fresh. Because chances are you're gonna give back the money to the market. So fear statistics, let me not go deeper to that, but I'll leave the notes for you to go through. So the other one is greed. Greed is the account killer. Okay. I know you have experienced greed. I think almost everyone has ever experienced. Actually, most of these emotions we've all experienced. Which one have you experienced so far, by the way, before I continue?
All of them.
All of,
I don't know where anxiety falls. I've not seen anxiety.
I think
Um,
uh-huh.
ile you lose something or something does not go your way, your whole body feels like there's an electric circuit going through you.
Yeah. Yes, it's a very valid emotion. So for me, sometimes I would struggle with fear, sometimes I would struggle with greed, also anxiety. I think anxiety also when you are in profit, you are tempted to like start taking your profits instead of waiting for the price to go to full TP. Sinda, tuseme ulikuwa unafaa kumake $5,000, you end up closing at $1,000 na ungengoja tu. So for me, that is one of the biggest problem that I've had fear, sana sana, and then greed. Especially when I'm doing well, most chances are I end up giving back money. So you need to be aware of this. So anxiety, I think it will fall. Let's see where it will fall. So how greed shows up? For a normal risk is 1%. For a greedy risk is 5%. Normal trading 2 to 5 setups per day. Greedy trading is 20 plus setup. You end up over trading. Normal targets is 2 to 1 risk reward. Greed targets you move TP further mid trade. Okay. Normal growth you grow with 2 to 5% per month. Greed growth is I need 50% this month. So those are the various ways greed comes in. And I hope we are recording. I hope we are recording. Please confirm for me.
Yeah, we are recording.
Okay, good. So the grid cycle. So you win, you get overconfidence, you enter big positions, you get big losses, you fear, then you go small positions, you win, and then you repeat, you repeat, you repeat. So you'll be sucking all just there. So the other one, the other emotional aspects, we have cognitive biases, which are blind spots. So there's confirmation bias, only seeing supporting evidence. That is 30% of losses. The damages you can have 30% of losses. The fix is you be the devil's advocate. So when you have supporting evidence, you only see supportive evidence. You remind yourself, no, I may be wrong. I'm highly 90% chance I'm wrong. So the other one is recency. That is overweighting recent events. For example, you see a candle is green, bullish, 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 bullish. And then you say, oh, we are continuing up. You enter a buy position just somewhere randomly. Even if it's according to your strategy. But then that is a cognitive bias, because what if we are going to grab liquidity? What if we are now supposed to be going down? You see now, and then you happen to enter even with bigger risk. So you see that is a very big blind spot which many people suffer from. So what this leads to, the damage it leads to is strategy hopping. You want to see what you want to see. Like now you are seeing something to do with RSI. Okay, RSI have to go to this mini. So you want to see your own things. So just go with the historical view, go backwards if possible. If you're trading 5 minute time frame, go to the 1 hour, see what is really happening, and then that will ground you. The other one is anchoring, stuck on entry price. You're just stuck there. If it's a position, also stuck in one position, I want to long, so I will only be looking for longs. So every trade you enter, you are just fixated to one. So it will lead to holding to losers, and then the best way is to have dynamic analysis. And then the sunk cost. You tell yourself, I've lost too much to quit. So you end up revenge trading, and then you say, mi sinanga bahati anyway, ikienda acha iende, you see. So, and then note that each trade is independent of each other. Sasa. So, this cognitive biases is one of the common one that almost every trader faces. So, yeah. The impact in statistics is present. It is present in 95% of traders. That's what I had said. Like most traders have this, and it's an ongoing thing. So you need to be aware of it. It reduces effectiveness by 20 to 40%. The last 3 to 5 trades influence the next 80%. They affect the next trades with 80%. So you need to be very, very careful not to be especially when you are entering trades. Tuseme trade 1 uliingia long position ikawin, trade 2 unataka tena kuingia long position ikawin, trade 3 tena unataka kuingia long position, chances are you are wrong, si ndio? It's supposed to taking self, but we juu uko fixated na long positions, you end up taking long positions. So that's how cognitive bias comes in. So then the final one is number 4, directional bias lock, which is a predictive in nature. Like you like to predict the outcome. You have prediction addiction. So uh, we have confirmation bias, most common cognitive rigidity, ni kurudia tu ya juu, anchoring bias and directional bias lock. So what happens is trader sees market must go up, market does go up. Traders response, this is temporary, I'm right. So the result, you keeps shorting into uptrend, so you experience losses. So sijui kama umeget like una market inaenda juu and yenyewe inaenda juu, but wewe unataka badala ya kuangalia kutafuta longs, wewe unatafuta shorts because uko like market imeenda sana. Kasa hii most of the market BTC iko long time highs, gold iko long time highs, ETH, almost majority of the instruments are in all time highs. Uko like tutaendelea kupanda, ama kuna mtu ako fixated iko juu sana, sahii tunafaa kwenda chini, but chances are market itajitafutia njia ya kwenda juu. So you see your bias is affecting you. So every trade you are looking, and then you don't notice it because you're like trade 1 umefail, trade 2 umefail, trade 3 umefail. By the time unataka ku reverse, now you do the opposite. So you end up failing like 6 times that day. You see how it comes in. So why this happens?
Yeah, I mean, sorry, I mean, I also, I remember sometime back, that's why sometimes it used to feel like gambling, or the traders used to look like they are gambling because
Yes.
they are debating kama inaenda chini ama inaenda juu, and this is valuable resources you're talking about.
Mm-hmm.
So I think maybe what I'm hearing you say is it's good to practice on your skill, be confident in it, and
Yes.
then execute instead of guessing.
Yeah. And it's sometimes it's not even about guessing or you're not sure. It's you are sure, but you yourself you are fixated on one thing. That's a problem myself I have. Like I'm fixated. I'm seeing the market. According to me, I'm seeing the market is going up. So I am blind to see when the market structure that it's in a downward trend. You get? So the
Mhm.
first trade of the day affects the rest of the day because I'm not seeing well. Like I'm not open-minded. Like the way I'm seeing things and I'm fixing my thoughts on that. So what I'm supposed to do is I need to go back to the higher time frame to see, okay, this is how it's going. Now I go down to the lower time frame and see, okay, is it aligning? It's a very major problem, and you may be right. You may be right that the market is going up, but you are not seeing that liquidity has to be grabbed also, because market structure can lead you to seeing all those things. So it's more of, yes, you know what you are doing, but there's some still factors that you yourself can hinder yourself, not the strategy. Sahi hapa si strategy tu iko sawa, so ni wewe ndio uko na hiyo, wewe ndio uko na hiyo shida. Does it make sense?
Yeah.
Yeah. So this is why now in many hedge funds they normally hire a psychologist. They strictly do that. Even me, Godilings, if I get a trading floor, I would love to hire a psychologist because it's an ongoing problem. You want to see your, and it's normal, it's human nature. Like wewe unataka tu kuona vitu zako, ni kama ni hard kuconvince mtu anything. Okay, so the best thing you do is just let somebody have their own thoughts, because even God tells us you have a you need to choose, sindio? Mungu akuforcing ufanye vitu, sindio? Anakupeanga that is the greatest gift every human being amepewa, choice, sindio?
Mhm.
So it's in relation to that. So because people can be very, very fixated, very, very fixated. So and it now comes to play even in trading. So why this happens? The neuroscience behind this is, number one, dopamine addiction. I won't go through that sana. So you'll just go through the notes, and then there's one more, cognitive dissonance. That is your belief market going down, the reality is market going up. The response, you deny reality instead of changing your belief. So another solution for this, as a trader, you need to be open-minded and be able to change quickly. You have to be able to change like in a snap of I think even 5 minutes. You need to be fair, 5 minutes. So don't juu unaweza zoea ku long 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 usahau kushort. So when I listen to podcasts, I see there are traders who look for shorts only. They trade only shorts pekee because that's what they know how to do. There's the other trader, they know how to long. So all they do is long. So you see the short traders right now, they can't make money. The long traders are the ones who are making money. And then vice versa when their time is there. So no, the same way.
Mhm.
So another one is ego protection. Your identity is I'm a smart analyst. The threat is you can be wrong. So and wrong trading equals to not smart. So the defense is deny I'm wrong and you deny you are wrong and then you go end up blaming the market. So building psychology mastery. Let's see how we can improve now based on that. So the emotional trading cycle where you are stage one optimism. You say this is easy. I'm naturally good. It takes few weeks, few months, and then behavior. It creates overconfidence, and you enter large position. Stage two, the reality check, and now anxiety. No, it comes in. You see how now anxiety came in now. So this is harder than I thought. You see. So you're even afraid of entering trades. Like kabla uingie trade unaanza kutetemeka, si ndio? I've been through that before, so I can laugh about it, but yes, it's a real thing. So the duration it will take several months, and then the behavior you become more cautious, and then even you are anxious even before entering a trade, during entering a trade, and during the trade, and even after the trade. The behavior is it leads to more cautious and more studying. So you start looking for the strategy, yet your strategy was working just fine. Stage three, desperation. So now here that's where many people quit. So many traders now start leaving trading because they are disappointed. So the first stage, they may have experienced beginner's luck. They made so much money because me, my first time trading ever, I made $1,000 in crypto.
Oh, that's
And
nice.
I was so excited. I was paid. I was a freelancer at the time. I was paid. And I said, sini trade hii pesa, nione italeta pesa ngapi. And then I leveraged like 1:50. I made so much money. I was so impressed. Na nilikuwa kwa gym. So hiyo time, nilikuwa so excited. So nilikuwa like, oh my gosh, yani this is the possibility. But it took months to go back to that. I didn't know then, but it was beginner's luck, and many people experience that. So there's that aspect. So after that, Sasa, the highest I would get was $50. $50. So $50 was so much for me, even though my first trade ever was $1,000. So and then now it came. I understood what that was a cycle of a trader, and then Sasa I started now making good money later. So it
You
was
appreciate you've gotten $50 from the market. Unasema, where this is good.
this is good. Nilikuwa so it is
Instead of losing 1,000.
You appreciate. So yeah, it's real. Something called beginner's luck. I think many traders can attest to that. They have experienced beginner's luck. So the desperation now leads to quitting because people say I'll never be successful in trading, and then it takes months and years. The behavior is revenge trading. Ukipata ka disposable income unaweka hapo unaanza ku revenge trade, you fail more, you see, and then you start strategy hopping so that, and then stage four now, where sasa you start seeing the benefits of trading, you accept. So only 10% reach this level. They understand trading is about the process, not the outcome. You need to be very careful. So the duration is it's ongoing mastery, especially mastering yourself, the behavior, you follow rules consistently. So you put rules in place and follow them. We'll cover rules and trading system in the final class because that's where it will all tie everything. We'll tie everything we've learned in the whole coursework, and then you see how to follow your rules. So daily psychological routine. Morning preparation, 10 minutes. It's not hard. You need to sleep well, first of all, and then you do a mental checkup. You say, am I emotional today? Niko na stress, niko mgonjwa, niko sawa, leo niko sawa, good. Haya, sina any pain, I can do it, I can do it. Haya, are you ready to accept losses for today? How is your balance, your account balance? Okay, don't go saying leo lazima ni make 10% ama leo lazima ni make 5%. You don't know. So if any, no, don't trade or reduce size by 50%. It means like if you have any issues, just reduce your nini ama stay off the market. You can take a break then. So bias prevention exercise, write down before trading. Sasa hapa the rules. Bullish case, evidence for up according to a strategy, and enter rules for entry, target, stop, and so much, and so on. And you need evidence. So you only enter and you follow that list very, very careful. Ukiwa unatrade kwa desk yako, andika tu ka page kamoja ama print ama utype print, uweke hapo. Utakuwa checklist, inaitangwa checklist. Unaweka hapo, unatik. Same case na bearish case, that way. So the rule, trade the stronger cases, not your preference. It makes you to not be subjective. You just end up following your rules strictly. So during trading now, bias check. What is price? Stop and ask time is not on our side. I think we'll just go on with the next one. Tutamalize hapa kwanza. So you stop and ask yourself before entering any trade, what is price actually doing? Now, during the trade sasa, what is price actually doing? Is it going according to the way I predicted it? Am I fighting the market? If I'm fighting, that is a bias problem. If I analyze fresh from now, what would I see? So you close, ama you open, kama inakuwa na more than 3 open charts for gold. One is for backtesting, one is the one that I use for trading, and another now to look at the market afresh. Because without any indicators, without anything, I just look at it. I see if I was to look right now, what would I do? So the other one is my bias making or losing money? So that's another. And then the good thing about, for example, my strategy is level to level. So from one swing high to one swing low, and vice versa. From swing point to swing point. So in the middle, if I see things are not going my way, I am like, okay, I will accept the loss, but I can see the loss coming. So I don't need to change anything. So I just accept myself, okay, good. I've been taken out. So market contradiction response. When market contradicts your view, 5 minutes wait, observe objectively, 15 minutes, write that price actually doing. If 30 minutes, if still wrong, exit position. 60 minutes, cannot hold, losing bias beyond this. Now, I know these are part of the trade, the coursework, but I normally tell people not to be fixated in managing that trade. What you can do is have a tool to help manage. For example, you just do it automatically. You say once price comes to 1:2, venye unasema ikikuja to 1:2, put a trailing stop loss. So that's an example of what I do. So whichever position I take, if I was supposed to be earning 100 pips, from 50 pips I start trailing. That is what it means. So in that case, my stop loss is normally around sana sana inakuwa 40-30 saa zingine 50, but mara mingi inakuwa 30-40 hivyo. So you see it will start trailing at 50 and I will make money even if it doesn't go to nini, nitapata nimeclosiwa na 80 pips ama 90 pips, like that. So that is what I mean. So evening review, you also need to journal. So hapa ndo journaling inakaa mingi. Watu wengi wana journalingi to the technical side, but they don't journal the psychological aspect as well. So one way to journal is say, was I calm? Emotions, was I calm, fearful, greedy, or revenge trading? Rules, did I follow my rules? Bias, did I fight obvious price action? Triggers, what made me emotional today? Tomorrow, what will I improve, like that. And then everything, if you improve one thing per day, per day, per day, by the end of the year, you're gonna be very far ahead. So let's cover, because I see 6 minutes remaining. Advanced bias flexibility. So you can do a drill. I'll leave it here. So you can switch sides. See, like for example, if you are to buy, unasikianga mtu anasemanga, watu wengi wanasemanga, if you see your strategy is failing, when you buy, when you see a buy, sell. So ushasikia mtu akisema hivyo, time ya kubuy, sell and vice versa. So yeah, so it's a drill. You do the opposite. So same case with this, but I'll leave for you the notes. You can check them. The other exercise is cognitive restructuring. You replace ego-based thoughts. For example, when you say, I predict market going down, you say, analysis suggests high probability of downside. When you say, I was right about that trade, you say, that setup had expected outcome. So when you say, market is wrong, I'm right, you say, market is giving new information, I'll reassess. And then you say, I am a terrible trader. You're supposed to say, I'm learning, improving each trade. And then you say, I need to make money today. You need to say, I need to follow my process today. Exercise 3 is forced opposite trading, severe cases. So hapa ndo nilikuwa nakwambia, for chronically biased traders, the problem is you always see only one direction. So example, keep shorting in an uptrend. So what you're supposed to do is to do now the reverse. But I'll leave the notes for you to go through. So there's a professional psychologist how they recommend, but I will leave you to read that. But let me just mention them. One of them is heart rate variability, and then sleep is very important. So this one you can practice like 10 minutes. You breathe in, breathe out, breathe in, and then you focus on your heart, and then you appreciate, you feel like unajenga kwa good mood. And then there's progressive exposure. You only risk as little as possible. So to build for confidence, start at 0.1 or 0.5. And then full positions, you can take 1% usipande, and it will reduce anxiety, because even position sizing, if you risk too much, you'll be anxious. So the best way is to risk little. And then mindfulness, you can do meditation in the morning, breathe in and out, use your exercises, and then it will help improve the trading. So know that the process is greater than the outcome. Do you have any question before we proceed? Ama, let me just finish here. So the old evaluation, ego-based, you would say, was I right about direction? Did I make money? Am I smart or dumb? The new way of evaluating yourself as a professional, you need to, did I follow analysis process? Did I adapt to new information? Did I do proper risk management? Did I do correct prediction? Yes. Any questions? Sorry, I'm hearing like you want to ask something.
It was somewhere up in the notes, but I'll fetch it later.
Could you remember what you wanted to ask?
It was okay, let me see. Okay. I'll get it in a few, but
Okay.
whatever.
So we have 2 minutes remaining. Let me see. So emotional state management, we have the pre-trade psychology checklist. You can also go through it before every trade. I think we'll be repeating. So psychological, not revenge trading after loss. You say no overconfidence after win, no chasing for more, and you be emotionally neutral. Risk 1%. Within you be within daily limits. You say every day I need to not go below 5% drawdown. Then you need to be comfortable with the amount you are losing. So hapa ndo naambiwa trade with the amount of money you are willing to lose. ndo usikuwe na fear na anxiety. Analysis system, set up matches all criteria, not forcing a trade, can articulate my entry just by talking. So one way also of journaling, you can also talk, you create a video record. You talk in trading view, there's a place where you can come and record yourself. So in every trade, what you can do is, let me just show you. You can come here. I think this is, yeah. You can come and, is it here kweli? Oh, you can publish. You come here to publish. You can come and record your video idea. You see, I'm clicking, and then you speak you can also speak your
Mhm.
mind, you record your video. So that's also a good way of journaling. All those video records, you can put them in one place, so you can choose to have like a diary at a YouTube. So some ndio maana unaonanga some traders, they go on YouTube to document their journey. Some of them normally are just journaling their way through trading. Sasa you have less than 1 minute. mm, uh Before we go on, I think if you have any question, just ask me so that we can continue. Sorry?
Yeah, up to then, I don't have a question.
Okay, good. So let's finish in the next class. So,
Okay.
okay. So you had a question I wanted you to ask before you continue.
Yeah, on that psychology bit, I mean, I know there are people who like doing things alone, like even in school, even at work.
Mm-hmm.
And there are people who like, um, especially for this kind of learning curve
Mm-hmm.
kind of space.
Mm-hmm.
Um, and then I think to some extent, maybe that's why people maybe who are still in campus, nini, are able to catch on this faster. Maybe the stresses are low, and then they're oftentimes they're together.
Yeah.
They teach each other or they encourage each other.
Mm.
Um, so in the absence of that, okay, of course, the people also teach themselves without being in groups. Others don't like groups also because of maybe they feel like that's their best way of doing it.
Mm-hmm.
So knowing that, so maybe saying you learn best in groups
Mm-hmm.
or you give each other encouragement in a group,
Mm-hmm.
and you're not able to find that group,
Mm-hmm.
what would you advise? I know there are also online groups. There
Mm-hmm.
are too many.
Mm-hmm.
That's not necessarily not the same as being like in physical contact or space as other people.
Mm-hmm.
Mhm. And I guess maybe that's where the teaching comes in. Yes, we may do these classes, it will expose you and I further. And
Mm-hmm.
somebody somewhere still wants to sit and listen and ask you all manner of questions. What do you advise?
Okay, I would advise. Um, there's one place I like going to, maybe ask questions. For example, on my end, if I'm stuck and I don't have anyone to ask, of course I can ask my friends, but maybe they don't know the answer. I can ask ChatGPT. But sometimes I would like a real person to answer me who is experienced. So I go to Reddit. I don't know if you've ever had Reddit. So Reddit has
Yeah, I know
communities.
already.
It has communities for traders where they can ask each other anything without them knowing who is who. So it's anonymous, fully anonymous. So it's a good thing. The other one is I would suggest to get someone to get an accountability partner, which not many people would be willing to do that, because you see you'll have to expose yourself to the other person and expose your demons, so to say, like your problems to someone else. But getting an accountability partner would be amazing also. Although not many people would be free to that, I think it will be a good one. The third option would be, for me as a mentor, what I would do, I would like to hold such meetings, just strictly psychological, to see how the community can help each other. Because there are so many topics when it comes to trading. So I think somebody can have a different point of view from listening to somebody else, not necessarily the mentor. So, for example, there used to be Twitter spaces. I would join Kitambo. Nowadays, I don't do that a lot, but you'll see people from all over the world speak, and you see, oh, okay, I get that idea. I know it's tiresome because people can speak, people can talk for hours, you know, but if it is directed specifically to psychology, helping people, because you again you see it's taking much of trading, it will be a good idea, and it's okay because you're helping each other. So if it's a project myself, I would be willing, because I've never thought of that, by the way, but I would love to do it if I was to be asked. Right on top of what is coming in my mind right now is I would hold such, not to be like accountable, to form like an accountability to others, not like an accountability partner, but more of what are the challenges you are facing, maybe to invite a psychologist to come in and see how they can help the community and all that. So yeah, I don't know if that is a good answer. I don't know if that
I
answer is
think that
sufficient.
is a no, it is good. It's a good idea. Also, it's not always that you'll find people like what I used to see in the Web3 space back in the day. People would deliberately organize these cafes or something, go somewhere, sit down, have discussions, and talk. But
Yeah.
obviously, it's not sustainable because not everyone can be at the same time at the same place to discuss these things.
Mm,
Um, so those online communities came up. People, of course, jumped on them and all. So yeah. Anyway, I think it's a good idea to to address
yes.
because the issue of psychology, I have a feeling one is not well understood, two is not well appreciated, three
Yes.
it's not communicated well enough. Algorithms, everyone going to YouTube, you'll find a trader teaching you a strategy.
Mm,
Everyone is into the strategies that are going on. But I
yeah.
think something needs to be done um, around psychology, especially for those who are doing this on their own or they don't have a support system around them, or even the support system would not know how best to to encourage them.
Yeah. I think
Yeah.
it's a very important topic. I think also the information on the topic is not as broad as people as I would love it to be. For example, in my end, even when I was compiling the notes for this class, I didn't find so much information on it. So it's also green for me. So juu tumezoea kuiongelea juu tu. So I would love to see the deeper ways, because you see a problem like overtrading, ama fear, ama anxiety will always be there, sindio? So if there is a way to have a solution, a psychologist to come in once in a while and advise and help, I think it would be awesome. I will look for one who is willing to do it for free. For free, but if they want me to pay them, it's also okay. But I would love them to connect my community with such a psychologist. I will look for one, by the way.
I'm
If you
glad
don't
I've
if you don't get one, we will start with what we have, and then we can invite them as we go. But I think people are willing to have this discussion. I will ask my
wow,
community later in the day.
wow, that's amazing. Thanks for appreciating my question and you finding a way of addressing it.
Okay, okay. So
Yeah.
let's finish up. So during trade management, you can set stop loss immediately in exception. So you can have a trading system, and then that forces you to put a stop loss immediately where it's supposed to be. Set take profit immediately. Check position 2 to 3 times per day maximum. Don't dwell. Maybe you can have a trailing. You manage the trade in a way that it will activate a trailing stop once it reaches maybe your target. Follow pre-written rules only, like the way I had told you. Write down in a nini in in a paper of sheet, put it in your desk, and then tick, have a checklist, and then accept outcome before entering. So you need to accept every loss before entering any trade, because remember, what can be guaranteed in trading is that you're going to lose money. Making money is not that much guaranteed. What amateurs do, they watch charts constantly, they move stop loss further when hit, they close winner too early, they let losers run, which is hope, and then they make impulsive decisions. So post protocol, that is post the trade, we have, after losing the trade, there's some exercises and some things you may do, and then I'll leave them for you to read. And then rule, never trade third loss in a row same day. So it would mean like you are fixated in one way, and your strategy is definitely not working. Post win protocol, after winning, the danger is overconfidence after wins. So also there's some things that you need to check. And then the rule is biggest losses often follow biggest wins. So just check them. So integration, psychology, risk, and strategy, how all the three work together. The strategy says value, we have a valid setup, we have a trend, we have a pullback and confirmation. Risk management tells you what to calculate. You have your position sizing, and then psychology tells you execute. Check emotional state. Are you calm? Verify setup matches rules. Accept potential loss. Enter without hesitation. Set stop loss and TP immediately. Walk away. Let trade work, and then follow plan regardless of outcome. The results, that is how the professional work of a trader should be. Higher. So I think I need to end up there. I don't think there's any. So there's a 90-day plan, for that is 3 months. So you need your awareness. It's an activity you can do. But I'll leave you to read. So there's month 1, awareness and foundation. Month 2, skill building. Month 3, real-time application. And then you create that habit. So you need to just create the habit of being good with your psychology. So you're ready when you have emotional control. You're ready when you have bias flexibility. That is, you can argue both bull and bear cases. You can adapt review within minutes. When wrong, you are not attached to predictions, and then you follow price action, not opinions. Then another thing that shows you already is discipline. You have discipline, and then you are focused on the process, not the outcome, that is money. So final truth, the psychology formula, trading psychology carries 40% of success. I don't know why I wrote the components, but and the percentages, because it doesn't even, it may not be exactly that way. In the components, you have emotional regulation, cognitive bias management, discipline and consistency, and then process over outcome. I'm done. Your psychology development plan. So yeah, I'm done. So you can read the rest of the notes, and then there's a conclusion I had written. I don't know if it's in these notes. And there's a place where you can have practice drill. So it's a train. You need to train yourself especially in changing your mind. That is one big, by the way, it's a very big factor. You need to be able to adapt quickly and change your mind quickly. If you're seeing longs and the market is going short, you can be blinded. I think I need to emphasize that you can be blinded by your thoughts, and it's a very dangerous thing. That day you may end up losing when you're supposed to be winning. So it's a very major thing. There's analysis paralysis. That is fear of being wrong. You are afraid of being wrong. So you overanalyze the market goes and leaves you behind, yet you would have entered and have won. So you are just behaving like a perfectionist. So what happens is you are afraid of being wrong. So you desire to be right at all times. Maybe the reason why is because you may not have enough money. So you are just fixated. I must win. I must win. There's also outcome attachment. You just want to see yourself win. And then imposter syndrome. I don't know what I'm doing, yet you know exactly what you're doing. That analysis probably is wrong, yet you would have just entered and made the money. So, and then you say, I'm not a real trader. Unaanza kujidharau. I'm not a professional trader. Something I'm doing for fun. No, you take it seriously. It's a real job. So ama unasema hiyo pesa hata sisi lazima ni make. You see, unaanza kujiambia tu vitu vingine hapo ukiwa peke yako, which is not good. So yeah, so reframe your mind shift. It's all in the mind. And then there's something I wrote here. I don't need to be right. I need to execute my plan. Being wrong with good process is success. Not taking valid setups is failure. That is a mantra maybe you can adopt. And then before I complete, I needed to mention something. I think I'm done. I'm checking if there's something I have missed because these notes now, there are too many. You don't have time. I don't want to go through all of them. Oh, there's something called hesitation. Hesitation, and I've discussed it before. So hesitation is brought about by fear of being wrong. So don't hesitate. Yeah, actually, it's bringing in what I wanted to discuss and conclude it. So the other one is I knew it. I knew it. I was right. You wanted to enter trade, but you didn't enter, and then the trade goes your way, and then you those two by themselves, the hesitation and the I knew it trap, you end up having missing trades, yet you would have won. Something very important, I think it's not emphasized in the notes, that I must add is confidence. One of the slept on characteristics of an emotion that I like to adopt and I encourage people to adopt is confidence. Confidence comes in so many ways, but the way I like to approach confidence is you have your roles set in place, you know yourself, you know there's those other factors, cognitive bias, there's fear of missing out, hesitation, hizo vitu zote. But once you have confidence, you take the trade just as it is. Let me show you practically with today's trade. This trade, I entered a sell position here. Yesterday, I got losses actually. Yesterday wasn't a good day. I lost about 120 pips. It is the first loss. And then today so far, I've made a loss. And you see, it is so valid. It's so valid. The way I was telling you, this market was showing an uptrend, of course, because you see, but me, I had seen a downtrend. Because if we take maybe a trend line, sorry. If we maybe take a trend, let me just give you the idea I had. This is what I had thought at first. a trend line. So I had seen something like that. So I was like, let me enter here and take a short position. Sindio. But the market was clearly giving me a long position. Let me remove this view up first of all. The market was clearly giving me an up because you see it's an impulse, correction, impulse. I would have entered a buy position instead. And the thing is, we are at a support level here. Yeah, it's a very good support line. A support level. Sindio, sinaona hapa. So, juu ya mimi kukuwa blinded, I didn't see this. You see now how blinding comes in. And then, since I am still fixated in the short position, I will come again and say, we have another chance. I enter my short position there. So the solution to this, and then I say, let me come and take my TP there. The solution to this is, of course, I may be taken out and you can see price just is consolidating around this area, going up. The solution to this is I should wait. I go to the 1 hour time frame. I see the bigger picture. What is the bigger picture? The market sits going up. India. You see, it's trying to go up. So at this point in time, because it is, yeah, it's trying to go up right now. So there's no point of me trying to short right now, and chances are even I don't have a clear signal to enter. So if, for example, I don't have a clear sign that this is a support, a resistance, let me go to the 1 hour time frame. This is not a resistance. The resistance is up here. Here. So you see, chances are you're supposed to be going up. So that's what I mean by having all those psychological issues coming in. The trade may go well, but especially this trade, chances are, and it doesn't mean you have to be perfect, but these are some of the things you need to look at. Like before you enter, because if you're trading the 5 minute time frame, already in the past 15 minutes, you have made your decision. I'm looking for a long position. So that's why I'm saying there is time for you to make that decision. So yeah. Any questions for Hema? I think I'm done with the class. Hello?
I mean, maybe just a comment that I think maybe what worked for you in that scenario was your stop loss also. So
Yeah. Yeah,
you didn't lose much.
yes, and then it's gold. See, although gold can make you a lot of money, it can also lose you a lot of money. It has so much volatility. So yeah, and it's okay. So and you can also be right. So the thing is, you need to have your own strategy. So for this, if I was to trade here, I didn't have a valid reason to trade because there's nothing in my setup, in my rules that is leading me to enter here. But here I had my rules telling me here, but I saw the opposite. So I was fixated on something because I had that option. I was like, okay, you're about to buy, but I overthought ama nilifikiria tena nikakuja tena nikasema, but you see I was right to buy, but I didn't go with that. I so me personally, what I concluded is we are in a sell. So yeah, so I hope it makes sense. So like before entering any trade, you ask yourself, should I buy, should I sell? That is every trader asks themselves that, should I buy, should I sell? So you ask yourself, okay, buy, why am I buying? There's a resistance here, a support here, I can buy here. So for me, I was like, I saw a flip actually. And when I put on the view up, I was like, we're gonna short. But you see already this view up already, we had a bullish candle closing here. It would have meant I buy if I went based on my roles of trading VWAP, one of the roles of trading VWAP, I would have bought. So you see, I was fixated. I was like, oh, we are supposed to be dropping. So kenye inamaanisha ni we unasema kenye we unataka, like we want the trade to go your way, but it doesn't work like that. That's what I mean. Any other question?
Okay, I like what you are reinforcing over here, that we are not lacking in skill, we are not lacking in knowledge.
Yeah.
Uh, we need to work on our confidence.
Yes, yes. That is the only thing you can fix. So you're not lacking in skill, you can identify good setups, good. You're not lacking in knowledge, you analyzed correctly, good. You are only lacking execution confidence. This is which is fixed, can be fixed. And if I go with the example of this, I didn't lag. Even if I chose a wrong side, it's okay because I put a stop loss, it protected me. You see how now stop losses normally protect you? It protected me when I was wrong. I was clearly wrong. Maybe I didn't see it, and it's okay. It's okay to be wrong. But what are the measures to put in place to protect you? A stop loss. So and it shows I was confident. You see, I entered without hesitation. So this is how you're supposed to be approaching trading, especially when you have your own setup and rules. For example, let me remove this because it's not where I would have entered in reality. But as I have explained, according to your rules, for example, if I go back to the other trades I took yesterday, I wasn't active. I wasn't so much active. Um, so for example, here, this is one of the trades that did well for me. This one, I feel like this one. This is a perfect example. When I'm right, I make so much money, like 200 pips. You see, and now another way of psychology, another thing about psychology is, let me close this view up. You see now, for example, this trade, somebody would have seen, they're making money, they come, they hesitate, they get out somewhere here. You see, yet they would have made all the way 200 pips. You get. So this is what I'm trying to say. Another one is here. This is a very valid trade. Instead of waiting all the way to come to 188, take halfway. What is the 188 divided by 2? It's about 90, 94. Once price comes, you set your trailing. Once price comes to 94, it starts trailing. You tell it to the stop loss to come to 94 and then it starts trailing pole pole. Unaona? So that is what I mean. So and then it ensures you have booked all this profit because I took this trade, I took this other one, and then it ended up, but this one was a success, and then this one was a loss. So the same way. Have I made sense?
Yes, you have.
Okay, good. So your homework starting today will be print and put on your desk your rules, and then I see good setups, I analyze correctly. My only job now is to execute what I see according to my strategy. Being wrong with execution is success. Being right without execution is failure. I trust my analysis, I take my trades, I build my confidence through action, not perfection. And then you start now from there. So yeah, any questions you can tell me. And yeah, I hope the class was interesting.
Yeah, the class was interesting. I think this is more of a personal responsibility, I guess.
Yeah.
Part of it is more like not really personal, the awareness that it's more of your own responsibility to study yourself,
Mm,
to know what works for you, that kind
mm,
of a thing.
yeah, yeah, yeah. And I would encourage you to help yourself by 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 being confident. I think I need to highlight confidence because it can make you doubt yourself. You can doubt a lot when it comes to trading because you get again you're trying to make a prediction or you're trying um to analyze and predict something in the future. So there's so much hesitation there. Am I wrong? Am I right? Am I wrong? Am I right? But what will help you is your strategy. Have your strategy, have rules in place, write them down. Writing down is so underrated. Write them down, have a checklist, put it there, and say, am I confident to enter this trade? Enter without hesitation. Put your trade management in place. And yeah, you'll see yourself making money. Because, for example, me, so far, even in my community, many people would see that ameluzi hizo trades zote huyu hata, but they forget last week we had a very good week. The week before that we had also a good week, you see. So and then somebody would have come aanze kutrade leo, tuseme haja trade for the whole month, akuja trade leo for the first time in maybe a month, apate losses, atasema oh my gosh, hata sijui kutrade kumbe, and I change to another strategy. You see now they are failing, but every strategy has a drawdown period. Like kuna time strategy yako haita work, unaona? So
Mhm.
set it work all the time. So you need to, and that's why stop losses are good. So in those times when it's not working, it's when people blow their accounts. No. So yeah. So
Mhm.
Rehema, thank you. I don't know if you have any final questions, any final remarks. Yeah.
No, thank you as well. I appreciate. I probably maybe even this ideas can be used to apply in life.
Mm-hmm.
Yeah.
Okay. Okay, good.
Mm,
So I hope you get well soon. The next
thank
class,
you.
we're
Hmm.
gonna do fundamental analysis. So let me
Hmm.
give you a small homework. Let me share my screen just one more time. Mm-hmm. Let me share my screen. And don't be discouraged. I know as we go on, you see, yeah, it's like trading is becoming impossible. There are so many rules to follow, but don't worry, with time, it clicks. It will just take like 2, 3 months and then it clicks. Especially if you are disciplined. It's just a
Hmm.
matter of clicking. Things like you have to be disciplined and follow your rules. So there's a website called Forex Factory. Because I won't be this one, because I won't go in the settings on how to do the settings. I will leave you homework. Go look for a video on Forex Factory and how to set it up. It's very easy, like 10 minutes. Because you just need red folder news uh, and and yeah. So because when it comes to the class, I will just highlight some of the things. And then to move faster, I will just be discussing the types of news you need to pay attention to. That's how, like FOMC,
Wow.
like NFP, which is very, very common. So we'll just dig deeper into those aspects of fundamental analysis. But this is the website. Just for your homework, go through it so that it may be easy, and then you can have many questions to ask me in the next class. Huh? And then also the final homework, go think about the strategy that best suits you. So you can choose, because the final class, I want to help you now build your system and write those rules. So if you choose, you're going to use support and resistance. If you happen to choose supply and demand, If you choose like Fibonacci retracement, if you choose you just want to use RSI and those indicators I showed you, they can also help. You just choose what you would like to use, and then we discuss that, because the last class will be you to doing majority of the talking. Sasa, because all I will do is putting my input. Sawa.
Oh,
So that is your homework for next week. Go through the Forex factory and know which strategy and the why. So be very keen in finding why. But if you choose that one, you can whatever you are going to discuss in the last class, you can replicate it with other strategies. So my homework to you is just find out which one you love, ama you see it's good with your psychology even, and your risk management, and why, the time frame, and so on, and then we'll build from there. So it's very important, because the last class, it will be you who is going to guide the class. Sawa.
nimepewa Mount Everest.
Umefahamu? Si Mount Everest. Okay. Anything hard ni clarify tu kidogo. Because homework itakuwa tu kufind ni nini na work well na mimi. Is this support and resistance? Is it this and this? And why? Important is why.
So I go through Forex Factory. I identify my strategies, and then I explain why.
Yes. So for example, you just need one strategy. One strategy, see a mix of one, because I want you to focus on one. Ndio sikuwe na analysis paralysis. That is, you just see, I want you to see the market in one strategy. Kama ni support and resistance, using higher time frame, like top down analysis. So you use 1 hour and then your entries are 5 minutes, ama 4 hours your entries ziko 30 minutes ama 1 hour. Unaona? Haya, tell me, why did you choose that? Is it because the number of pips are comfortable with your account? Okay, how would you do the risk management? Tell me. How much would you enter position sizing? Tell me. And then how would you feel in the trade? And so on and so forth. Umeget a picture? Kama ni kutumia Bollinger Bands ama trend lines ama EMAs, moving averages. How are you thinking about, like, how, if you are to trade right now, basically how would you enter a trade? Hivyo ndo namaanisha. Okay, if it's hard to just pick one, we can pick two. We build on two. Is that okay?
Okay.
Yeah, C2 is better than one. So
Yeah.
yeah, so you'll pick two strategies. The main strategy, they can have confluence. Confluence is, for example, a fair value gap inside a fair value gap, an imbalance. Another one is confluence is another, maybe a pin bar. Nakumbuka class ya pin bars, ama shooting star, ama doji. Unaona? Haya. But the strategy is support and resistance. Supply and demand. Kuko na VWAP, the strategy. Kuna Fibonacci retracement. Kuko na moving averages. Unaona? Hizo ndo sasa strategies. But you can go and look also search ChatGPT to give you the main trading strategies. Alafu go with what you covered, yenye uliona nikiexplain, yenye ilikufurahisha, and then build on that. That is what I mean strategy. There's the main strategy, and then there is confirmation. Sasa bullish engulfing. Bullish engulfing is an example of a confirmation, because it's a confirmation candle. Doji is a confirmation candle. Okay.
Okay.
Any other question you'd like me to clarify? Yeah, Forex Factory, near next class, which is just know the settings. I will guide you still, but I just want you to be familiar with the platform. So enda utafute tu a brief video, maybe 10 minutes. Look learn more about Forex Factory. Sawa.
Oh,
Any other question? And parting shot, naona
sawa sawa.
tuko na less than 1 minute.
I have no other question right now. It's just to appreciate all the effort you've put into this.
Okay.
I consider myself very lucky and blessed to have crossed paths with you to learn so much.
Mm.
Yeah, so it's a very valuable um, process and journey that I've had the opportunity to experience. Yeah, so I
Okay.
really appreciate that.
Okay.